Hey everyone, Shauna the Tax Goddess. Today we are talking about captive insurance. Now, this is rather a big subject with the IRS right now. It is on the IRS's Dirty Dozen list, but I need to tell you an insider secret here. It's on the IRS's Dirty Dozen list when you don't do it right, okay? Tax strategies get on the IRS's Dirty Dozen list when you do something wrong, when you're using it for bad purposes, when you're using it only for the tax deduction and not for the actual purpose of the insurance itself, right? Of the strategy itself. So today I want to talk about the 6 things that you need to have to ensure that your captive is a good kind of captive and not the bad kind that the IRS is not happy with. So if you haven't heard of a captive insurance company, what is this thing? Okay, so step number 1, what is a captive insurance company? A captive insurance company it's your own private insurance company. So you know that when you have a car, you have to have car insurance in case there's an accident, okay? Normally people will use Geico, State Farm, Farmers, whoever that is, okay? A captive insurance company means that you own your own insurance company. Now, why would somebody consider a captive? First of all, you pay your own company premiums rather than paying somebody else, rather than paying State Farm or Farmers. You get to keep your own insurance premiums, which is a huge positive, okay? Number 2, why would you consider a captive? What if the type of insurance that you need is not covered by a regular insurance company? Okay, so let's use an actual example. Let's say you're a business and you build the roofs on Amazon warehouses, okay? Well, when COVID struck, there were supply chain issues. So you could not get nails, you couldn't get wood, you couldn't get the materials that you needed to be able to build the roofs on these structures. That's kind of a problem, right? And when COVID hit, a lot of businesses went to their normal regular insurance carrier and said, okay, I can't get my supplies. I've had business interruption. I've had these things. Pay me out, please. The regular insurance companies basically said, act of God, not paying you out. Okay, and these were real case examples, guys. When you have your own insurance company and you have your own insurance policies, an act of God can be covered as one of your insurance policies. And as we saw during COVID, this is a real necessity. It's a real need, okay? Captive insurance basically allows you to customize your coverage tailored to your specific business, to your specific needs, okay? Versus traditional insurance, which can often be expensive and inflexible, right? COVID happened and now you don't get a payout. So big problem there, okay? Now, you may also be able to reduce your insurance costs, okay? If you go into a captive, maybe in your specific industry. So for example, if you're in the construction industry, they have captives that are in the construction industry. You may be able to reduce your costs because they specialize in a certain area. Or alternatively, you may be able to go into a captive group that does not have, you're the only construction and you're the only baker and you're the only lawyer. And because the risk is spread out, you might be able to reduce your insurance premiums and still keep the same coverage or get additional coverage. So lots of benefits to considering a captive. Now, of course, number 3, on this channel, we talk about taxes. So for Tax Goddess, why do we recommend captive insurance? There are absolutely tax benefits to having your own captive company. Okay, now the first one is the premiums paid to your captive are deductible for your business and they are not income if it's properly structured. Big asterisks here, properly structured. It's not income to your captive insurance company. Okay. Typically, the captive's underwriting profits can also accumulate and be tax deferred. So that's pretty cool, okay? But this whole thing has to be properly structured, okay? And that's really where these not so good, the Dirty Dozen captive companies are showing up, is that they're not properly structured, they're not maintaining the right documentation. I know nobody wants to talk about the tough stuff when we do tax strategy, but very, very, very important that you have the right documentation when we're talking about captives. Okay. Now, number 4, who's going to benefit most from having a captive? You're typically looking at high net worth business owners. So complex risk profiles. you've got maybe multiple businesses and there's different kinds of risks in the various businesses, okay? Businesses that are in industries that are unique or very hard to insure. So for example, when cannabis first came out as an industry, they went heavily into captive insurance because nobody else would insure them, right? They weren't a real business in the eyes of many of the insurance companies. So setting up their own captive was a good thing. Generally, businesses with some cash flow, right? So you can capitalize on that cash flow by putting it into your own insurance company, and then of course also mitigating your own risk. Now, a couple of things on that compliance front. You have to be a true insurance company, okay? If you're doing it just for the tax benefits, the IRS calls that a straw man. They don't like that very much, okay? So much better if you are operating as a bona fide insurance company, you have real risk shifting and distributions of actual payouts, right? So you had a risk, you submitted the claim, you got a payout, okay? It requires some pretty careful structuring and planning, so make sure you have expert guidance. Side note, we do these all the time, so if you need help, if your CPA isn't familiar with captives, definitely let us know. And of course, there's regulatory requirements by state. So there are some offshore captives. We don't normally talk about those because those are the ones that typically don't do it right and get you in trouble with the IRS. Now, I'm not saying all of them. Nothing is ever 100%, but make sure that you're working with somebody that understands the tax law, understands how the captive is supposed to function, and ensures that it actually happens, right? That things are actually doing what they're supposed to do for you. Okay. Now, final point number 6, why should captives be a part of your advanced tax strategy? They blend asset protection with tax efficiency. I really like those two things coming together, okay? Often they can allow you to double dip on your money. So you get a deduction and you get some tax-free earnings, depending on how it's structured. Of course, captives, I believe at the moment, the maximum amount you can put into a captive is about $2.9 million per year. So if you are looking to protect your wealth for generations to the future, captives are super helpful for that kind of thing, okay? Now, highly recommend, again, asterisks, stars, be careful here, okay? I want to make sure that you are working with a good captive company and not one of the dirty dozen IRS list captive companies. So if you are unsure or you are looking for a tax strategy that's going to give you big bang for the buck, can be done pretty easily without a lot of work on your part, call us. Let's chat about captives, okay? This might be the right strategy for you. So in the meantime, to all my friends out there looking for tax strategies and tax opportunities, if you have questions, don't hesitate to ask us. Taxgoddess.com, super easy to find. Team and I here are here to answer questions. We specialize in tax strategies for those taking home more than $1 million a year, paying more than $100,000 a year in tax. So if that's you, reach out and let's see how we can help. All right, thanks so much, everyone. Have a great day, and we'll talk to you later. Okay, bye.